They're busy. They're not focused on real estate.
Yeah.
And then you combine that with most people, January, February, March, April, May, they're actually preparing to sell their houses in the summer when the kids get out of school.
All right, let's talk real estate market update. What are you seeing out there as a realtor, specifically in Windsor, Ontario? Yes. Not necessarily limited to Windsor, Ontario, because I'm sure you have connections elsewhere, right? So
yeah, it's a hit and miss in other markets. I've heard like Calgary's super hot, GTA's hit and miss. Windsor, I think, has peaked for the year. Same kind of cycle that's played out the past 3-4 years.
And what's that cycle?
January, February, March, April, May, June, we are on the rise starting from January 1st. Peaking sometime in May or June, and then a slow, steady kind of drop off into December 31st before the market starts again in the new year. So,
and for people that don't really understand what you're talking about or referencing, usually summertime is a fairly slow point in the market. Is what you're getting at.
People might attribute this to the rising rates, which I'm sure are playing a role. They might attribute it to a crashing economy. Who knows what, whatever. But this time of year, people are busy. They're on vacation. They're taking the kids to wherever, Canada's Wonderland, whatever. Like people are not sitting on their computer on Realtor.ca.
They're a little more sleepy in the summertime. Yeah,
they're busy. They're not focused on real estate. Yeah. And then you combine that with most people, January, February, March, April, May, they're actually preparing to sell their houses in the summer when the kids get out of school. So you get an influx of extra inventory combined with dissipated pool of buyers, and then combine that with an interest rate hike and another one potentially on the table, or at least that's in the news right now. I mean, it's kind of the perfect storm for a slowdown. But what we always talk about is like, okay, have the fundamentals changed, right? What's the actual story here? And got into a little bit of another Twitter spat, one of our Twitter spats here. But
fun. I didn't see that one.
Somebody posted that the rate hikes are slowing the market, whatever. I said yes. In the previous interest rate hike cycles, what happens is the rates hike, the market adjusts, right? It takes a period of time for prices to dip a little bit to match the new affordability levels, the new pre-approval levels. And then once the market adjusts, which takes a few months or maybe longer depending on how big the hike is, then the market fundamentals start to play out again. And that's what I anticipate happening here is, they raise rates, we're adjusting. They might raise rates again, we're going to adjust again, probably a little bit lower. And then once it's adjusted, the market fundamentals take over, and
we're in the same spot again.
Supply and demand, which is the same freaking problem. Literally everything other than interest rates is pointing to higher prices and higher rents.
Yeah.
I think we're on the same page there.